Visa and Mastercard are two of the most highly debated companies for which is the best stock to be held in one's portfolio. Both of these companies are the largest payment processing companies in the world, with Visa holding a share of 60% of the credit and debit card market, alongside Mastercard in second place at 30% of the market. And the revenues of these two companies are only going to continue to get larger year over year, with the trend in debit and credit card payment options slowly continuing to rise year over year, along with the use of cash as a payment option slowly becoming obsolete. So knowing that the future of the payment processing industry is likely going to be very bright, along with the fact that Visa and Mastercard are essentially a duopoly in this space, with slim chances of other competitors taking their positions, we only have one question left to ask. Which is the best stock to own in your portfolio? Well, in this video, I'm going to be trying my best to answer that question depending on the type of stock that you want in your portfolio. And so if you do enjoy this video, make sure to diddle that like button down below, because I did put a lot of research into this video and I would appreciate it. Also, if you haven't already, definitely consider subscribing and hitting that bell icon down below so you don't miss any of my weekly investing videos just like this. So with that said, let's get right into the comparison of Visa and Mastercard as the best stock to buy. So before we get into the fundamentals of these two companies, we first need to understand how Visa and Mastercard actually make money. So first of all, Visa and Mastercard are only payment processing companies. They are not lenders like banks. So that means for all of the Visa credit cards that you use on the daily, Visa is actually not providing you with that money to make the transaction. So if Visa and Mastercard aren't getting the interest on your credit cards whenever you forget to pay your bill at the end of the month, then how do they actually make money? Well, there's an entity called the card issuer, and this is typically the bank. So the bank will give you the Visa or the Mastercard, and they will determine which network they want that card to be on, whether it be the Visa or the Mastercard network. And this will often depend on the types of benefits that each network can offer to the card holders. Then whenever the card holder performs a transaction on one of those debit or credit cards, the Visa or Mastercard network will facilitate that transaction. And the merchant, otherwise known as the one that you're buying from, is actually charged a transaction fee that could range between 1% and 3%, and then that is paid to Visa or Mastercard for facilitating that transaction. But the fee structure greatly depends on the type of card that's used for the transaction. So for example, Visa and Mastercard will actually charge a lot more for a transaction that's done on a card with premium benefits when compared to a card that doesn't really offer that many benefits. So for Visa, as you can see, their payment structure is divided into three different categories, and those are Classic, Infinite, and Infinite Privilege, with Infinite Privilege having the highest costs. And then basically the same thing goes for Mastercard, divided into three categories, but they are named slightly different, and those are Core, World, and World Elite. Now what I've personally found by living over here in Canada is that Visa typically offers better rewards on their credit cards, and as we can see, their payment processing fees are a lot higher than those of Mastercard, and so that makes sense. But as a result of this, Costco Canada actually only accepts Mastercard as their preferred payment option, and they don't allow any visas to be processed in Canada. I'm not sure how that is in the US, but I think it's due to those higher fees. So now that we have a basic understanding of how these companies generate those revenues, let's get into the fundamentals of these two businesses. Alrighty, so I ordered these two companies side by side and summarized basically all of the data that we're going to need to look at today regarding Visa and Mastercard stocks. Now the first category that I want to talk about today is something that I like to call moat. As I discussed in my last video, a moat is typically something that is found around castles to protect it from intruders entering and destroying the castle or the people inside. And this can also be said about a company, and so all of these different metrics in here are relating to these companies to help them stay afloat and making them very resilient to other intruders entering the industry. Now, first of all, taking a look at the market capitalization, we find that Visa is the largest of the two, having a market cap of about 385 billion, and then Mastercard has a market cap of 270 billion. Now, both of these businesses are very diverse across the world and operating in 200 plus countries, a little bit more for Mastercard, but I really wouldn't give it to them because it's such a similar number. Now, in the payment processing space, one of the metrics that these companies like to report is the amount of cards that they have outstanding in the market. And for Visa, they have 3.4 billion cards out there, whether it be debit or credit cards, and then Mastercard has 2.6 billion. So clearly Visa is the winner in that case. Now the next metric that these companies like to report is something called the payment volume, and that is essentially the cash value of all of the payments that were processed under that network. And for Visa, it was actually $8.8 trillion in 2019. And then for MasterCard, it was $6.5 trillion, which is absolutely insane. And then in terms of the individual number of processed transactions, it was in the 130 billions for Visa and then 87 billion for MasterCard. So as we can see from this, all of these three quantities are absolutely remarkable for both of these companies. So they are clearly the leaders in the industry and they have a strong moat. Now, what we also recognize is that even though these are technology companies, they still are fairly old, being 61 years old for Visa and then MasterCard over 50 years old. And so clearly Visa had that 8-year advantage on MasterCard, and so that might be a reason why they have a larger market cap and are the bigger company. Now, something else that I want to point out in this category that is very important when trying to understand these two companies is the amount of growth that they've had in these three categories. Now, in Visa's case, they had growth of 3% in terms of their cards outstanding, whereas MasterCard had growth of 5% in 2019. Now, in terms of their payments volume, Visa had growth of 6% in 2019, whereas MasterCard had growth of 13%, which is over double. And that does make sense because MasterCard is the smaller company, so you would expect that they would have slightly higher growth than Visa. And finally, taking a look at their processed transactions, we find that Visa was able to grow those 11% in 2019, and then for MasterCard, that came in at 19% growth, which is very, very high. All right, now getting into their valuation, we do find that Visa is trading at a slightly lower valuation than MasterCard, with a trailing PE ratio of 31, whereas MasterCard has that trailing PE ratio of 33. And they both have identical forward PE ratios, which actually isn't showing that much growth in 2020. And of course, I'm sure we're all aware of the reason behind that, because the current market conditions are not going to be allowing for a lot of growth in these companies. However, I believe they're still trading at these higher valuations because of the future potential past 2020 when we get out of these current market conditions. And just a side note, I do think that these companies are going to be totally fine during these current market conditions because a lot of the payments that are done on Amazon and online right now are still going to be facilitated by Visa and MasterCard. Now, another valuation metric that I like to look at is the price to earnings growth ratio, and that is just essentially your trailing PE ratio divided by your earnings growth rate into the future year. And for Visa and MasterCard, that's actually identical right now, sitting at 2.2. So no differences there. All right, now getting into the income statement, this is where things switch it up a little bit. And for the revenue in 2019, Visa had $23 billion in revenue, whereas MasterCard was just below $17 billion. In terms of their net income or the profit at the end of the day, Visa took in $12.1 billion, whereas MasterCard took in $8.1 billion. And that actually gives them a profit margin of 53% and 48% respectively. And guys, I do just want to stop here and recognize that these profit margins are extremely high compared to some other companies, and typically you're going to find that with technology companies because their overhead costs are a lot lower than, say, a company that sells a product directly to the consumer. But in this case, we do find that Visa is the slight winner with the profit margin slightly higher at 53% versus that 48%. But really it's not a huge difference. Alrighty, now getting into the EPS growth, over the past 3 years, both of these companies have been able to produce 29% year-over-year gains in their earnings per share, which is ridiculous. And this is very surprising to see that Visa is keeping up with MasterCard in this regard, but I believe that over 2019, they were only able to average about between 15 and 20%. So this is mainly contributing from earlier years. And I believe that into the future, MasterCard is going to have a slightly higher EPS than Visa, as we could see from above in all of these metrics that they were showing higher growth. All right, now taking a look at the balance sheet, this is one of the most important parts for investors to understand, especially in a time like this where it's uncertain economic conditions. So really, if the companies aren't producing any earnings, the first thing you want to look at is the balance sheet. But of course, in this case, both of these companies will continue making earnings, so this isn't as important as for some other companies. Now in Visa's case, they have total cash of over 12 billion, whereas MasterCard has total cash of just under 8 billion. And then that brings their current assets for Visa up to 21 billion, whereas for MasterCard, that would be just under 17 billion. Now for current liabilities, Visa is sitting at 13.4 billion, and then MasterCard is at 11.9 billion. And what I can say from this is that MasterCard has nearly the same amount of current liabilities as Visa, but Visa has a lot more current assets and cash than MasterCard, and so that shows in their current ratio, which is the current assets divided by their current liabilities. And so what we find is that Visa has a slightly higher current ratio than MasterCard, and that is because of their higher cash position and higher current assets relative to their current liabilities. Now, another important metric for investors to look at is the cash ratio, and this is essentially the total cash divided by the total current liabilities. And a company with a high cash ratio will be able to weather a storm a lot better than a company with a low cash ratio, because that company may not be able to pay off those current liabilities within the given year if they don't have enough cash. And so in the case of Visa, Visa has a cash ratio of 0.9, so they almost have enough cash to cover their entire current liabilities. As we can see, it's at 12.1, and then their current liabilities are at 13.4 billion. Whereas in the case of MasterCard, they actually have a much lower cash ratio, which is sitting at 0.6, and that is because their cash is a lot lower when compared to their current liabilities. Now, is this a concern for me? Really, it's not, because I know that the company is going to continue making those earnings and that income, and they're still probably able to grow that income even during these bad economic times, so I'm not too concerned about it. But for a company like Carnival Cruise Lines, for example, that maybe isn't going to be making any earnings throughout the next year, this cash ratio would be critical in that case. And the final ratio that I want to look at today is the long-term debt to equity ratio, which essentially is the long-term liabilities divided by the total shareholders' equity. And this ratio tells a lot about how much debt the company is taking on relative to the amount of equity that they have in their company. And so we want to see a lower ratio, and that's typically better. Now, in Visa's case, they have a long-term debt to equity ratio of only 0.5, which is pretty good. And then for MasterCard, it's triple that at 1.4. And that signifies that they have much more long-term debt relative to what Visa would have on their balance sheet. And that does show slightly higher risk as the business is expanding and needing more of that debt. All right, now the next section that I have here is called dividends. And typically a company like this, like Visa or MasterCard, is not going to be a huge dividend player. They are growth stocks, but they do pay dividends, and they have been consistent in increasing those dividends, so I did want to talk about them. Now, the first thing we want to look at is to find out if this dividend is sustainable over the long term, and that's why I like to look at the dividends paid. And for Visa, it was 2.3 billion. And for MasterCard, it was 1.3 billion. And when we look at this number of 2.3 billion and compare it to the amount of cash that they have on their balance sheet, they could probably pay this dividend for the next 6 years and be totally fine. And then for MasterCard's case, they have 1.3 billion paid out in dividends compared to their cash of 7.7 billion. So I'd say they're also very fine in that regard. Now, if you were to buy into this company today, you would actually be getting a forward yield of 0.7% for Visa, and then 0.6% for MasterCard. So honestly, guys, it's essentially insignificant, the dividend at this point, but they have had a lot of capital appreciation, so that does make up. And of course, with such low yields, we do find that their payout ratios are very low. So 19% for Visa and 17% for MasterCard. That is expected based on their forward yields, so I have nothing to complain about here. Now, in terms of being able to grow these dividends year after year, the consecutive increases in those dividends, we do find that Visa's only been able to increase those dividends for 10 consecutive years, and then for MasterCard, 9 years. Now, I'm sure that this is because of these companies recently starting to pay dividends over the past 10 to 15 years, and so I'm sure these numbers will increase over time. But what is marvelous about these companies is that they've been able to grow their dividends at a very high rate, which is 20% per year over the past 5 years, and that goes for both of these companies, so bravo. That is excellent and definitely makes up for the lower yield. All right, now finally getting into the last section of this video, I'm comparing the share repurchases between these companies because this is another way that Visa and MasterCard return value to their shareholders. Now, for those of you that don't know, share repurchases essentially elevate the amount of earnings per share that these companies can make, because they're making the same amount of earnings but then reducing the share count. And so that ends up boosting the EPS and actually boosts their stock price. So in the year of 2019, Visa repurchased 56 million common stock shares, whereas MasterCard repurchased 26.4 million. And the value of those shares repurchased was about 8.6 billion in Visa's case, and then 6.5 billion for MasterCard. Now these two numbers don't mean a whole lot side by side. We can't really understand what that means in terms of a return to the shareholders. So that's why we need to take a look at the shares outstanding. And for Visa's case, they have 2.2 billion shares outstanding at the end of 2019. And then for MasterCard, that was 1 billion. And essentially this translates to a value of 2.4% of the shares that they had outstanding, they repurchased in that year. And then for MasterCard, they repurchased 2.5% of their shares. Now these numbers are the values that will be translated to the shareholders' value if the stock price were to go up by 2.4% or 2.5% respectively. And it should also be noted that these companies did announce additional share repurchase programs. And so for Visa's case, it is 8.5 billion in the forward year of 2020. And then for MasterCard is 8 billion. And it doesn't mean that these companies are going to do all of these share repurchases. It has no expiry date essentially, but these companies do have the availability to purchase these amount of shares in the coming year. Alrighty guys, so there we go. That is the comparison between Visa and MasterCard, and now it's time to figure out which one is the best to buy. After analyzing all of those metrics, we actually have found that Visa and MasterCard are very similar when it comes to a lot of their fundamentals. But the one clear difference that we can find between these two companies is that Visa is the larger and more stable company with slower earnings growth, whereas MasterCard is the more risky, higher earnings growth oriented and higher debt oriented company. And when I say risky, it's only a relative term because both of these companies are very stable and very safe. I'm just comparing Visa versus MasterCard when I say that MasterCard is slightly more risky than Visa. And so in my personal opinion, I would have to choose Visa as the clear winner here because they are the largest in the industry. They have the largest market share in payment processing, and they are the most stable company that's been around for the longest out of the two. Now, because this company is a lot larger and more established, they are at a slightly lower valuation than MasterCard because they do have that lower earnings growth. I also really like the fact that they do have less debt than MasterCard, and all of their ratios in terms of their balance sheet are spot on. However, that's not to say that you shouldn't invest in MasterCard, because if you're willing to take a little bit more risk and pay a slightly higher valuation, you might get some more growth out of it because MasterCard is growing those earnings slightly faster than Visa. Now, being completely honest, do I think that either of these companies are extremely cheap right now? I would have to say no, because they're trading at valuations above a PE ratio of 30 for both their trailing and their forward PE ratios. So that's definitely not cheap by any means, but I would say to keep them on your radar for future buying opportunities. Now, I personally own Visa stock in my portfolio at an average cost of about $144 per share. And I think I did pay at that higher valuation, but ever since it has gone up a lot higher than that. And so I would probably only be looking to add to my position if it came down to about $150 per share or in the 150s range. But overall, looking at these companies' spotless track records, I think that they're both great options to buy into and hold for the long term, because I don't see this industry going anywhere anytime soon. And I think these companies are going to maintain their positions at the top, having their highest market shares within the industry. So with that being said, thank you guys so much for watching this video. I really do appreciate it. And let me know down below which of these two stocks is your favorite. I'd be interested to know. And then of course, definitely smash that like button for the YouTube algorithm to support my channel. And if you haven't already, definitely consider subscribing down below for more weekly investing videos just like this. And I'll see you guys in the next one.